the moderator of these wonderful energy-focused webinars that Gulf Intelligence hosts. I am head of news in EMEA at S&P Global Commodity Insights, and I'm delighted today to be joined by such an esteemed and knowledgeable panel. Firstly, I'd like to introduce Mehmet Uçu, Group CEO, Global Resources Partnerships Chairman, London Energy Club. Then Niamh McBurney, Associate Director at Control Risks. And finally, Omar Al-Ubaidi, Director of Research, Bahrain Center for Strategic International Energy Studies. Now, I want to get into it straight away. We've got a lot to talk about, a lot going on in markets. Brent crude trading at the moment just above $85 a barrel, pretty buoyant, considering some of the mixed economic signals that we're getting. I'm just back from S&P Global's CERAWeek energy conference in Houston. For those who aren't familiar with the event, it's the Davos of energy in the US. Pulls in pretty much the C-suite superstars of the oil industry, oil ministers, policymakers, thought leaders from across the world. One of the big things that came out of this, however, was a big pushback by the international oil industry on the pace of energy transition. You know, we've heard a lot about this, especially in the region, in the UAE over the last year, where they held the COP28 meetings about this pace of energy transition, decarbonisation. You know, we wind back a few years ago and, you know, you went to CERAWeek and oil was actually a dirty word. When you were talking to some of the big majors in the industry like ExxonMobil, Chevron, Shell, BP, etc., they couldn't decarbonise quick enough. Now the rhetoric has changed. Aman Nasser, the CEO of Saudi Aramco, opened the conference with a pretty punchy speech. He used the word oil is the speed of oil transition away from oil is a fantasy. I guess where you're, so I'm going to come to you first, Niamh, on this. Do you think that this this pushback is just rhetoric? Do you think that that they're serious about this? Of course, it's underpinned by a divergence in forecasts, right? You have the International Energy Agency saying peak oil demand possibly by 2030. Yet you've got institutions like OPEC saying we're still going to be producing more oil, needing more oil, you know, well beyond 2040. What's the story?
I think it's a reflection of that divergence that you say between OPEC and the IEA, and the kind of extraordinary whiplash we've had over the last 5 years in narratives around the, you know, society and global use of energy, how that's going to change. COVID was a real shock to all of our assumptions because it completely overturned everything for at least 9 months in energy markets. They then took a while to recover, and we've kind of gone back to the sort of 2019 level uncertainty around what the future actually looks like, because then we had this weird reset in the middle that kind of, you know, shook everything up. So it's I mean, to some extent, I'll be honest, like sitting in the region and sitting in a country that, you know, just connected its fourth unit of the Baraka nuclear power plant to the electricity grid this week. It isn't fully operational yet. It should be in the next couple of months. But ironically, sitting in a country that is actually pushing really hard on and delivering very effectively its energy transition kind of energy supply future. It does reflect an awareness that we are going to need more oil for longer, pushing back against the narrative in Europe and the US predominantly.
But at the same time, the UAE planning to produce or have capacity to produce 5 million barrels a day, right?
Yes, so they're really hedging their bets. And, you know, this has come up in the podcast in the past as, you know, how that competition between the UAE and Saudi for production and also, you know, frankly, does the UAE remain a member of OPEC? And that'll be a discussion for the future podcasts, no doubt. So they're hedging their bets very effectively, but ultimately we know that they are prepared, you know, if they eventually get to 5 million barrels a day, that's for export, because we're all going to need more plastic as part of the energy transition because everything needs to be lighter. So it's but kind of back to that point on Europe, we've seen the real decrease in demand for slightly hybrid vehicles, certainly fully electric vehicles, and there's a huge amount of mixed messaging coming from a lot of different directions on the energy transition. So I kind of think both parties are right. It's probably, the answer is probably somewhere in the middle. And what's really unfortunate is that because both sides are fairly adamant in their positions, they can't come together. And actually, much as we're seeing in regional geopolitics, which we'll talk about in a bit, that means that we can't mark a clear way forward, which is just a bit of a shame, really, given the amount that's at stake.
So Omar, you're sort in Bahrain at the moment, center of the Gulf's oil industry, in a sense, geographically center of the oil industry. Of course, not a major oil producer, however, a pretty big refiner of oil products, with Bapco historically being a major player in refining. Is this, does this really matter to regional leaders? If you're, Sheikh Mohammed bin Zayed, if you're the Crown Prince of Saudi Arabia, Mohammed bin Salman, if you're the ruler of Kuwait, is this just semantics? Do they really care? Or does climate change actually, does energy transition pose a more systemic political risk to the models of governance that we see in the region?
I think it absolutely does pose a systemic risk to the models of governance. And I agree with everything that Neem said. I would just add that in the specific case of the Gulf countries, without wishing to sound cliche, they see the climate change as both, a threat and an opportunity. The threat side, as you mentioned, is that the way in which these societies, their relationship with the government, the way in which income is generated and distributed is very much tied to a specific way in which the oil and gas sector, creates value. And that's something which is, existentially threatened by climate change. But by the same token, Saudi Arabia and the UAE in particular and Oman have been, correctly perceived that the climate change, movement is happening. So let's try and turn this into an opportunity. In Saudi Arabia, in particular, has ironically a huge endowment of solar energy because of its space, because of its land area. I mean, you could have solar panels in the empty quarter that power Europe. So it needs investment, it needs strategy, it needs vision. And so far, they've taken good steps in that direction. And they also realized that the green economy could potentially offer more interesting jobs for their youth than the traditional economy, because oil and gas is very much a capital intensive industry and doesn't create jobs. So it does matter, but in the near term, I think the rhetoric about it doesn't really matter, because after the Ukraine war, the Russo-Ukrainian war, it's pretty clear that there's a lot of empty rhetoric around climate change, and there's a lot of people who make loud proclamations about which direction things are going in, and they've been demonstrated to have not really studied the actual details of how such a transition would occur, and they've been exposed as more sort of sloganeering. So I think that, short term for them, it's noise, but in the long term, they're cognizant of the fact that this transition is happening and they need to get on board. But what this implies for the future of the political systems of these countries is anybody's guess at this stage, because nobody really knows what the way in which the economy and the government will be interacting 30, 40 years from now.
It's an interesting point that you make there around the Russia-Ukraine war, because I think that when the war started, 2022, the invasion in February of Ukraine by Russia, there was a lot of debate over energy security, which we're still having now, and how this could actually speed up energy transition, because developed nations dependent on Russian energy would seek other alternatives, and renewables could fill that gap. It hasn't really worked out that way, has it? No. Instead, we've got surging oil demand, and we've got a rush for gas globally, and we often ask you to discuss the perspective from Ankara. Well, in Turkey, a nation that is profoundly energy dependent on imported sources of hydrocarbons, it seems more focused on getting access to those hydrocarbons as opposed to pushing hard for energy transition. How do you see it?
Well, let me first say thank you, Andy, about the deceleration of energy transition, as the Saudi Aramco CEO said, you mentioned at the beginning. Clearly, what he said is that, the share of hydrocarbons in energy mix today is around 80%. And over the past 2 decades, huge investment channeled into renewables, and its share, if you take only solar and wind, is around 4%. $9.2 trillion spent, but still it's a minuscule compared to the huge challenge we have in the world. And as you said also, there's an intensifying debate or battle between IEA and OPEC. And also there's a mention that some US giants are asking US perhaps to withdraw from IEA because of these projections, and that put oil and gas investment into disadvantage. And so I think we have to recognize that the energy transition will not go as planned. And now we are on the way to Baku summit, COP summit, where the real discussion will focus on the financing of non-OECD countries moving into the renewables. And it's not going to happen. There are serious hurdles there. Then the geopolitical battles we have in Ukraine, Russia, then in Red Sea, Gaza, and perhaps more will come to the fore, like Transnistria, which Russia threatens to annex at some point. And therefore, geopolitics, transition, and also investment needs will be going in tandem with one another, increasing uncertainty. When you look at it from the Turkish perspective, what we see is that there is a heavy dependence, as you said, on hydrocarbon exports, 98% in natural gas, 94% in oil. This is huge. And Turkey is not under the obligation of sanctions, but there are secondary sanctions applied as well from the US. And this is making life a little bit difficult because Russian oil deliveries to Turkey, UAE, and especially China are having difficulties in collecting revenues because US is pushing ahead for that. And Turkish state-owned banks, Bank of China, and other banks, and UAE banks as well, are delaying or canceling some of the payments because of the fear that secondary sanctions will be applied. And there is going to be a huge problem for Russia because it heavily depends on oil exports. Despite the sanctions with the ceiling, $60, it was selling at discounted rates to China, India, and Turkey. But this is making life a little bit difficult for the buyers right now. And plus, on top of that, Russian compliance with the non-OPEC, OPEC plus ceilings will make life a little bit difficult. Russia doesn't want to stop exporting, but they are going to slow down production. And Deputy Prime Minister of Russia already instructed some of the Russian companies to reduce their output so that it is in compliance with OPEC plus, but exports will continue. In the meantime, there is a huge activity against Russian energy infrastructure, including refineries in Samara. 10% of Russian refinery capacity had been wiped out. And there are more attacks on Russian energy infrastructure, including pipelines and some of the oil and gas fields by Ukrainian drones. So it is going to heat up because we were expecting Russia to launch an all-out attack against Ukraine in the summer.
So I'm gonna pause you there, Mehmet, because it's interesting on a number of levels what you're saying there. So on the one side, Russia's under pressure. Refineries attacked. It's being squeezed by sanctions. But then on the other side, you look at the data. It's still now, I think, number 2 exporter into China and India. It's a kind of neck and neck race between Saudi Arabia. You know, they have successfully rerouted renewables into that Asian market. You know, there's a lot of talk, and again, this came out at CERAWeek about competition, market competition, and this was a theme at London Energy Forum between Russia and its partners in OPEC. How can that last? You know, there's some talk in the background that there is tension starting to bubble up, and we've seen market share competition amongst close allies in OPEC.
Exactly, with Saudi Arabia especially
with Saudi Arabia. I'm going to come to you, Niamh, next on kind of where we're going with this. Do you think that the US that the sanctions have been effective, the price cap's been effective, or do you think that this is very much a kind of straw man strategy and it's blowing over in the wind?
I think saying it's a straw man or was a straw man strategy is probably take it a step too far. I think the administration intended for it to be effective, but I think we and most analysts are fairly conclusive in the assessment that it hasn't been successful. And to Mehmet's point about secondary sanctions and the reports about banks in the UAE being a bit concerned, I know for myself, when sending rent payments last year, I was required to fill out a little form to confirm to my bank that I was not breaking sanctions, even though I was paying it to a local landlord. So, you know, even just, you know, paying your monthly rent, you're under a bit of pressure. And I can only imagine what the forms are like for companies, trading companies to fill out who are based here. But
well, I mean, possibly not that complex, considering the amount of Russian, you know, oil that is being traded through the UAE at the moment.
Well, true. Yes, maybe the regulation needs to change again. And I'm sure we'll all find out about some sort of leak circular from the central bank at some stage, given these things are generally done fairly quietly here. But actually, I mean, on the regulatory point, that's something that's strengthened enormously here, and the authorities have been very concerned about it. It's not something that they are sitting back on at all. So it's been fascinating to see how quickly the regulatory environment has changed. Ultimately,
that's the issue here. It's how tightly you squeeze things. You know, the US administration, the Biden administration, they don't want to squeeze too tightly. You tank the oil market, you do the opposite. You send oil prices through the roof, create an oil shock. But then, you know, the irony is, you know, that you have things like STS transfers of Russian oil, you know, certainly happening in the Arabian Sea, in Gulf waters now, right under the noses of you know, what we have historically seen to be the world's most powerful navy, the Fifth Fleet, based in the Gulf. I'm going to come to you,
powerful right now.
Pardon?
Which isn't particularly powerful right now.
Well, it doesn't seem so. I'm going to come to you, Omar, on this next question. You know, certainly, you know, within the Majlis, in the courts of you know, various leaders in the region and elsewhere in the region, just, you know, generally, is the perception of US preeminence, has it been damaged by some of the geopolitical shocks? Has it been damaged by what we see in Russia? Has it been damaged by, you know, what you could see as a failure to negotiate a ceasefire in Gaza, and you know, the failure to kind of bring people to the table there, and you know, we can kind of wind back as well to a more broader debate about whether, you know, the US can sustain its commitments under the Carter Doctrine, providing securities to the region. You know, are regional leaders looking more for, you know, to the likes of China and India for security support in this debate, as opposed to their traditional allies in Washington, D.C.?
I think that nobody has any doubt that the US continues to be the most powerful country in the world. But there's two things that have changed recently. One is that I would say is a sharp increase in the domestic political dysfunction in the US, which is spilling over into foreign policy. So whereas foreign policy, you know, up until the late 90s in the US was, you know, pretty institutionalized and predictable and non-partisan, starting with Bush Jr. and all the way through now to Biden, it's become deinstitutionalized and personalized, and, you know, and highly and unfortunately increasingly capricious. So what this means is that even though nobody has any doubt about the US's influence, whether it's economic or military, it's become a much less attractive partner because it can't really commit to anything. And it says one thing and does another, and the State Department's doing something different to what the Department of Defense is doing, which is doing something different to what the White House is doing. So it's become, I mean, to use the sort of colloquial term, flaky. But nobody doubts that when it puts its mind to it, it can be still the most powerful country in the world. So that's one change. And the other change is that, you know, in the following the collapse of the Soviet Union, it was a unipolar world, and so really you had no option but to work with the Americans. But now China offers a genuine alternative, not a perfect alternative by any stretch. But if you're looking for capital, if you're looking for geopolitical leverage, if you're looking for influence, then you have an alternative. It's not an alternative that every country in the region goes to willingly, but it is an alternative that many in the countries in the region are feeling as though they're forced to go to, because if you're a small country and you are unable to maintain your security, you need a big country to protect you. And the US has demonstrated, you know, following the attacks in 2019, following the attacks on UAE and Saudi infrastructure, civilian infrastructure, following the continued, you know, maritime threats, which are, you know, only now have they started to hold anyone accountable for it. But in the Arabian Gulf, all the stuff that's been going on in the Straits of Hormuz, nobody's been held accountable for it for years. So really the message coming loud and clear from DC is that, you know, we're only going to be doing very minimal interventions, and we're not a security guarantor. And so these small countries have to look for an alternative, and China is beginning to offer an alternative. And then in the case of Israel, how this reflects, this is just a manifestation of, you know, the Israeli policy is just a manifestation of this sort of duality whereby the US is able to do a huge amount, but domestic political factors force it to end up making it do very little.
So I'm going to get you on a specific here then. So in our lifetime, let's say the next 50 years, and you're in a unique position in Bahrain, do you see that the US is going to have a kind of withdraw from east of Suez moment where, you know, that Fifth Fleet base in Manama, the flag's going to come down and the Chinese flag's going to go up? Will that happen?
I don't think that's going to happen, for the simple reason that the US rivalry. So the US has a large rivalry with China, which is becoming its priority, and it understands that China depends on oil and gas from the Middle East, and it would be, you know, a geostrategic mistake that is beyond even the current administration's level of incompetence to commit. You want to be able to control the energy flows from your major rival. So if they, so it's absolutely from their perspective worth maintaining that base there and maintaining that potential lever over China. They don't want to let China have free reign over its, you know, over its energy supplies.
So I'm going to take the contrarian view here. I'm going to come to you next, Mehmet, on this. That if you look at what's happened in the Bab el-Mandeb, the Red Sea, if you look at what's happened on really an unprecedented 5-year period of attacks on energy infrastructure in the region, and we can go all the way back to Abqaiq. You know, we track these attacks very closely at S&P Global Commodity Insights. I think we've tracked 175 attacks in the last 5 years. But actually, the US response has been pretty tepid. And you know, is this to do with, you know, at the same time, 2023, you know, the US became the world's, you know, largest producer of hydrocarbons, biggest producer of crude and oil products, I think in excess of, you know, total 21 million barrels, in excess of 12 million barrels of crude, you know, producing another 3-4 million barrels more than Saudi Arabia. You know, is it any more in the corridors of the Pentagon and the State Department and you know, where the big policies are thought up? You know, do they think, well, actually, you know, we're in competition with these Gulf oil producers now because we export a lot of our oil around the world?
I don't think it's that at all. I don't think it's that they're competing. I think that it's very simply that they the US, it's unacceptable domestically in the US for US military assets to be attacked. So the moment when things happen in Bab el-Mandab, it's not really a major threat to US interests. So therefore they engage in what I would call a performative, which is what you call tepid, performative responses, just to make it look like they're doing something as a sort of way of satisfying or at least paying lip service to their partners. But the key is they don't want any military escalation, which would then put their assets at risk and then maybe then force them to have to withdraw Suez style, as you mentioned. So they want to maintain their assets there, and they realize that because of the domestic or political pressure, the best way to maintain their assets there is to not get into a fight unless it's a fight that really is central to US policy, and that fight hasn't appeared yet.
So, Mehmet, I'm going to come to you. You know, in the UK, we'd say the US strategy in the Gulf at the moment is all show and no trousers.
Well,
is that something you agree with that, or you think I'm off the mark?
Well, I mean, I think there are three reasons why US is very keen on the region to keep its presence strong. One is, of course, security of Israel. Now we are discussing it in Gaza and Red Sea as well. And second thing is about the security of supplies coming from the Gulf, which was so important in the past. As you say, it's not as critical as it used to be. Now you have US huge production, but also Canada, Mexico, and Venezuela filling the gap if there is any. Therefore, this is not the number one priority. And the third one, which is more important, I guess, is US claim to be supreme power in the world. And you cannot neglect that region, which is the heart of so many different interests. Therefore, I think there is also a conflict within the US system, governance system, Pentagon, State Department, Department of Energy, White House, CIA. They are all having different ideas about this. Then CENTCOM, under the Pentagon, is the most prominent power in the region to reckon with. And they have their own views as well to stay strong in the region. And I think over the time, as Chinese are asserting themselves more strongly because of their dependence on the region as part of their global outreach as well, I think US has to match what Chinese are doing. Therefore, I don't see any possibility that US will be even gradually withdrawing from the region, unless its power, economic power, will be stretched, because currently, as you know, the defense expenditures of the United States is around $800 billion. This is much more than European Union, Japan, and other countries, Russia combined. So unless the economic constraints and the military limitations will stop US being so active, I think it will continue. I would like to address also here another question, because Turkish-US relations were so much strained over the past 5 years. But now we see some relaxation in these relations. And Erdogan, I heard yesterday, will be invited to the White House after so long absence as a guest of honor, as a state head of state. And this is also another signal that the relations between Turkey and US might be easing up as part of the global US response to how to react to Russia, Iran, and China's expanding outreach towards Turkey.
So on that point, Neem, the Biden administration arguably has been quite adept at playing both sides in its geostrategic relationships in the region, and as Mehmet points out, inviting Erdogan into the White House potentially, for a state visit. But we've got an election at the end of the year in the US. It's going to have profound impacts on everything in the world: politics, economics, certainly oil. Do you see the possibility of a Trump administration, a second Trump administration, being as subtle and adept at working across the aisle, shall we say?
So we at Control Risks do think that there's a potential for another Trump administration. I can't remember what percentage we put on it, but it is in play nonetheless. Are they going to be as adept? Well, I would argue that the first administration showed us that there won't be a kind of scorched earth campaign is probably going to be repeated. And No, they're not going to be. And if anything, for the region as a whole, for the Middle East, and then also for all markets more generally, I mean, I'd argue that that's going to lead to even more volatility.
So I think we're going to have to, on more volatility. I think that is a good point to end on, because I think actually we could all probably be in agreement on that one point. You know, we live in as we saw yesterday with the tragic events in Baltimore. You know, we do live in a volatile world, and you know, it's putting an ever greater strain on our energy systems and our commodity trading networks, which underpin the global economy. I hope that you all filled in the survey on where we see oil prices. I know, you know, I was kind of somewhere, I think, you know, $90 a barrel is definitely possible. 33% agreed with that. But however, most people are still staying on the fence. $85 a barrel seems to be the consensus. Thank you so much, Mehmet. Thank you so much, Neem. Thank you so much, Omar. This has been a really fascinating debate today. A great way to start my day off very early here in the UK. I wish you all a great day and a great rest of the week. And hope to catch up soon. Thank you.
All the best. Thank you.
All the best.
Thank you.